Hello everyone, and welcome back. Don't forget to subscribe for the latest Bitcoin news and price predictions. 420 Bitcoin trading at $15 in 2012 on move after 10 years. 420 Bitcoin tokens were just moved amid the struggling markets after being dormant for 10 years. A whale has moved up to 420 previously dormant Bitcoin tokens valued at $7.1 million against prevalent rates. Bitcoins have been unmoved since 2012 when BTC traded below the $15 price point. After hodling through several price tops and bottoms for 10 years, the wallet involved has finally reawakened the assets. A few hours ago, verified crypto quant author and founder of DivOneChain, Martin, first highlighted the development. 10-year-old $400 BTC moved today. Last time they moved in 2012, Martin disclosed in a tweet Thursday, sharing a chart of the crypto quant Bitcoin spent output age bands to corroborate his report. A close look at the Bitcoin spent output age bands chart reveals that the network witnessed a movement of about 420.40 BTC on December 1st after 10 years. The reason behind this enigmatic movement remains largely unknown, but more often than not, ancient HODLers reawaken their tokens after such a long time when it's time to sell them off. Consequently, this has precipitated sell-off concerns. Previous BTC movements. In addition to the recently reawakened BTC tokens, there has been a wave of movements for decade-old BTC tokens of late, with about 5K plus BTC moved between November 1st and 30 after being dormant for over 10 years. The BTC community has begun the month of December with another massive reawakening. The largest whale movement involving 10-year-old BTC occurred on November 11 following the BTC crash from $18,000 to sub 17K. The transaction saw the movement of 3,741 BTC tokens valued at $63.5 million plus at the time. The assets were moved a few days into the FTX saga and at a time when several market watchers were already calling the bottom. Recall that FTX filed for bankruptcy on November 11. Recall that 10,000 Mt. Gox Bitcoin was moved on November 24 after 7 years. Meanwhile, BTC is still struggling to pick up the previous month's losses, which appears to have been the coldest in this cycle. Following a drop from the lofty position of $20,000 plus on November 8, the asset has been struggling to reclaim the $18,000 price point amid the FTX saga. BTC currently trades at $16,938, up 3.33% in the past 24 hours. How Bitcoin could reach a new all-time high. Once written off by national governments, Bitcoin just might become their escape. Bitcoin has traditionally been viewed as a hedge against central banks. However, one Harvard PhD candidate believes it's these central banks that could spark Bitcoin's next leg up and possibly give it the momentum to return to previous all-time highs. Matthew Ferranti is in pursuit of his doctorate in economics, and his most recent working paper covers a topic most economic studies tend to avoid. His work attempts to prove that now, more than ever, the likelihood of a central bank or government adding Bitcoin to its reserves is at an all-time high. Politics and Bitcoin. When Russia invaded Ukraine in February 2022, global powers such as the US and the European Union coordinated an all-out financial attack on Russia by placing sanctions on its economy. They froze the assets of specific individuals, placed bans on the import of Russian oil, and even targeted Russian banks, effectively excluding them from the world's financial system. These sanctions were a first in terms of scope and breadth, but sanctions aren't new, and the number of countries or individuals receiving sanctions from the US continues to grow. The US Department of Treasury lists all of the active sanctions programs it is currently engaged in, which includes more than 22 countries. Ferranti believes that the criteria for what deserves new sanctions are loosening, and as this list grows, there is a greater precedent for these ostracized countries to search for alternatives. Traditionally, gold has been viewed as a way to skirt sanctions, and Ferranti proves that gold is still a valuable hedge against sanctions, but he suggests that in today's digital world, an asset like Bitcoin could become even more sought after for many reasons. First, Bitcoin tends to remain uncorrelated to gold. Owning Bitcoin could provide diversification on a central bank's balance sheet outside of just gold or US dollars. In addition, due to Bitcoin's digital nature, it's more flexible for a range of needs. Ferranti suggests that Bitcoin could be advantageous as opposed to gold for countries that have very poor infrastructure and don't have the capability to store large amounts of gold. David Gokhshtein stands by Bitcoin at $250,000 as reported by U Today earlier this week. Founder of Gokhshtein Media and former U.S. congressional candidate David Gokhshtein tweeted that he does not expect Bitcoin to reach $1 million as many news articles have recently been claiming. Instead, he expects the flagship cryptocurrency to reach a modest $250,000, and that would do for him. By the way, if you want to support, please support by liking the video and subscribing to our channel. U.S. institutional investors flocking back to Bitcoin, is the bottom in? The Bitcoin price has seen a minor rally after yesterday's speech by U.S. Federal Reserve Chairman Jerome Powell. The price rose above $17,000, driven by the statement that smaller rate hikes are likely imminent and could begin in December. Ultimately, analysts see a 50 basis point hike in December almost a lock. The Fed was merely trying not to make it look dovish, but it will come, was the tenor of the market. On Wall Street, the remarks were met with applause. The Dow Jones and the S&P 500 saw a strong relief rally. This euphoria also spread to the crypto market in a muted form. Bitcoin was trading at $17.119 at press time and now faces resistance at $17,197. If this can be overcome, a push into the $17,800 to $18,000 region would be possible, where massive resistance could lurk. U.S. institutional demand for Bitcoin is coming back. As CryptoAdssup CEO and founder Ki-Young Ju noted, market sentiment among large investors in the United States is recovering. Ju comes to this conclusion as the hourly BTC price premium on Coinbase has turned positive for the second time since the FTX bank run. The Coinbase Premium Index has long been a reliable indicator of sentiment among institutional investors for the crypto community. It also includes institutional investors, of which Coinbase has the majority, according to its report for the third quarter of this year. The index is rising due to increased trading volume on the exchange, which indicates a return of confidence in Bitcoin from institutional investors. As News BTC reported, there is still one major concern for the market at the moment: a possible bankruptcy of Genesis Trading and DCG. However, these rumors scattered in recent days. The companies are believed to have only a solvable liquidity problem, and not an insolvency issue. Bottom in or more pain? However, continued selling pressure from a second Bitcoin miner capitulation within the current cycle is looming and likely to cloud the positive outlook. As we have reported, miner capitulation is in full swing. According to CryptoAdssup, about 4,000 BTC of selling pressure was added by miners this week. The company's data shows that miner transfers to exchanges picked up as the price fell from about $20,000 to about $16,000. In addition, miners' BTC reserves have fallen by 13,000 BTC since the end of August. Thanks for watching. See you next video.